What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Gina. Is your last name pronounced Shin, or is it like Shin, or like which
Just Shin.
Shin? Okay, yeah. Like I was using the two different sounds from Mandarin, but anyway, that's awesome. How you doing today, Gina?
Good, good. Thanks for having me.
All right, awesome. And I got to tell you, Gina, I've got some really great news. My very favorite audience member is joining us today. And why is my favorite audience member joining us today? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, all that kind of stuff. And why do I do that? Well, part of it is because it's the law. If you want to have access to private deals, and 85% of exempt offerings are private, then you have to have a personal relationship with the people in your business before you can let them know about it. So that's what I'm doing so that my guests can tell me their private deals without having that risk. But before we get too excited with what we're doing and how commercial deals work, Gina, do you want to introduce yourself to the audience a little bit before we get started?
Sure, thanks. So my name is Gina Shin. I'm the managing partner of Shin Equity Partners. So my background, I actually started in the mortgage lending industry. I did that for about 10 plus years. And then at some point I pivoted into the real estate investment side of things, specifically on the commercial side. And the reason why is because I would be doing loans for high net worth individuals and I would be seeing their tax returns trying to figure out why are these people so rich? Basically, right? If you don't have family money, why are you so rich? And why are your taxes showing negative dollars? And why are you getting refunds bigger than my income? And like, what's going on here? So I started looking into that and eventually decided I should do this.
Yeah, that's a really relatable story. You know, me coming from CRMs and stuff like that. That's a lot of the same thing that I was doing with my clients. It was just like, how are you making all this money? And so I love that you put it that way. But the first section that we go through here is the five distinct motivations. But before we do that, but wait. Check your eight. Gina, I don't know if you can see through the camera and into the audience's device. And under there, there might be a big, like really ugly red button that says subscribe. I don't know if they've hit that and got the gray. The gray one's a lot better. Okay, these are just jokes. Okay. Anyway, let's continue. The five distinct motivations that really separate the different investors. Well, the first reason why some people are doing this, and that's what I really like to look at, is because it takes like a few months to close a property in general. There's got to be a really good reason why people are doing it. Now, the first reason I've found that some syndicators or investors are making their next acquisition is because they've already got a portfolio of assets, and the way they make ends meet is by the profits from owning those that portfolio. But when inflation rears its ugly head, or if there's an asset crash like the stock market this year, they go, well, wait a second, I should pivot and I should put it into something that maintains its value, and I also get paid for owning it, and that's why they'll make new acquisitions. These guys aren't going to be very transactional. They're going to be more of a buy and a hold type, and that's the strategy I like, but this is not really what I'm up to. That doesn't really describe me that much. What does describe me is that coming from CRMs and my CRM agency that I've had since 2011, one of the problems of getting a salary or wages is you're paying more in tax than anybody else, just like Gina was describing. But if you actually make it so that you're getting rewarded in the form of deployed capital instead of a wage, then you get a tax advantage that just you can barely compare it. And then there's other tax advantages like depreciation as well. So that's why I'm into all this. But some people That's a little bit too abstract for them. But when they get into commercial real estate, the reason they're doing that is because they want to take control of their schedule. Maybe that means they want to fast track their retirement. Maybe it means that they want to work fewer months per year or fewer weeks per month or something like that. But they're looking to scale back a little bit. The people who use this one to describe them. Whereas the last two, they're going to be highly motivated. They're going to keep on hustling into their 90s. Like this group here, they're so ambitious. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And so they're going to be hustling into their 90s. That's absolutely fantastic, those types. And the last group, though, they're also highly motivated, but they've picked a sector of society, or maybe it's the environment or animals, or want to send people to space. Who knows what it is? But they need a substantial financial backing if they're going to be able to pull that off. And so that's why they're making these acquisitions. So, Gina, as far as you go, what combination of those five describes you best?
So, trading time, that's probably the biggest major one for right now. So since my background was in the mortgage lending industry, especially during like the COVID time where interest rates were like, less than 3% for a 30-year fix. I mean, the rates were crazy. And so as you can imagine, the work was crazy. I was working like 80 hours a week, maybe even more on a pretty regular basis. I mean, it would not be uncommon for people to get emails from me at 3, 4 in the morning. And then I would wake up and I would basically lay in bed, look at my phone around 9 o'clock in the morning and say, okay, this one funded, this one funded, this one funded. Okay, I think I have like 15 minutes. I should go upstairs and work some more. And so that was like that every day, even on the weekends. I mean, it was just nonstop. And so with this huge influx of capital, I mean, everyone in my industry was like, this is never going to happen again. This is like a once in a lifetime event. And so everyone was busting their butts trying to make all this money. And then everyone was spending their money. Everyone was buying their Beamers and buying their $2 million houses. They were going crazy. And I was like, I don't think I want to go through this again. Like, even if this happens again, 10 years down the road, I don't want to be caught in this cycle where I have to do this again and again and again. It's like, my friend, good friend of mine, she describes being a loan officer as like being like some kind of an addict. You're constantly looking for your next high of where can I make the money? Where can I make the money? You're just addicted to this rush. And it's fine if you like making money, but to have no other option than to do that. That's what I didn't want. And so that's when I started transitioning into real estate. I took all that money that we made and I started investing it. So the cash flow is definitely a huge thing. I don't necessarily have to really work right now, but I would like for my husband to not have to work as well. And I think that would be something it would just be great for us to be able to take a month or two off and just travel and do whatever we need to do and not have to worry about everything else happening, right?
Very relatable. Very
And so
relatable.
down the road, eventually, it's going to transition to helping those who need it. So even in my business, we've been kind of trying to figure out how do we pivot the direction of what we're doing? How do we change our investments or our business strategies so that we can incorporate more things to make it more impact focused, so that we're not just helping ourselves by gaining time for ourselves, but we can maybe provide some kind of financial literacy education for those who don't have it, or in just different things that we're kind of thinking of that will be hopefully rolling out in the next couple of years. And so those are things that ultimately that's going to be our biggest driving factor, is because we've been fortunate to be able to know how to work through these systems and navigate through all of these intricate pieces of investing, but not everyone is in that position where they can kind of scrap themselves out of the hole that they may have been digging themselves into.
I love that answer. And you're not a newbie by like because of your mortgage background and all that kind of stuff. But sometimes on these chance encounters, I do have newbies on here, and sometimes they've heard it's like, oh, commercial real estate. There's lots of money in it. It's like, well, there's also a lot of work in it if you're in the wrong part of it. And so what I like to do is I like to find out if they realize the risks involved, and I do that from comparing. So I've got a fill in the blanks question for you here, Gina. There are many popular investment asset classes, but I think blank is too risky. It sounds like you're going to say a W-2, but it's not really normally what people think of an asset class. But what's too risky for you?
So the obvious answer that I'm sure everyone's thinking right now is crypto, right? Outside of real estate, crypto is, FTX just imploded, and I have friends who trade or used to trade in crypto, and they would say things like, it's great for trading, the volatility is great, but I would never own a piece of that crypto. So that's the obvious answer. But in my opinion, I think that as far as real estate goes, the most risky class is actually short-term rentals. It's Airbnb. It's the way
Mhm.
that they're changing their algorithms. It's the way that cities and towns and even counties have been changing their regulations and have been just flipping things upside down overnight. And I think that is extremely volatile, especially for those who have purchased properties using a short-term rental loan,
Mhm.
specifically using the income from short-term rentals in order to qualify. I think that once the short-term rental dries up, these people are going to be in a lot of trouble.
Yeah, yeah, I love that. And the fact is, you're running into the exact same issue of single family rentals anyway, which is that you're paying too much per door. Your exposure per door, it's so high, and like why wouldn't you, go for something like multifamily where you can get it under 100K a door, and of course I know lots of places there's like, yeah, I wish I could get 100K a door, but there's still places where you can get under 100K a door. I know it. But anyway, let's get into the next part of commercial real estate specifically. And to do that, I always use the Dan Does Deals Commercial Competency Cube. You can download your own copy at dandoesdeals.com. And one thing I do, which is a really bad idea, I don't even ask for your email address. And hundreds of people have taken me up on this. But the reason why I don't ask for your email address is because I want zero barriers. I want you to be able to print it out, no BS, and I want you to be able to practice using it on your friends and family, because that's the only way you're going to be able to effectively communicate on the subject of commercial real estate. So in every episode of Chance Encounters, I go through all 6 sides, and then that way you know how my guest fits into these deals. So to start off, the repositioner. The repositioner, blah, 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 blah. The repositioners look at a lot of different properties here, and they do a bunch of paperwork. And what are they doing with that paperwork? Well, there's a fancy word for it. They do the underwriting. That means they're doing the math. They're figuring out, first of all, is this property even making as much as the broker or seller claim it is? Because it might not. Okay. And what is the repositioner looking for? Why are they called a repositioner? Well, they're figuring out what kind of changes can we make to this property so we have more upside. And there's three main tools in their tool belt to pull that off. The first one is going to the financiers and getting more advantageous lending. So a financier is someone who deals purely with money and paper. It can also be like some investor relations and all that kind of stuff is involved, of course, but let's assume that that's not on the table. So if a repositioner has a typical deal, the first place they're going to look is making the operations more efficient, stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets or mowing lawns and picking up the rents and all that kind of stuff. There's a marketing component, which is one of my own fortes, and that keeps the vacancy rate super duper low. And then there's also all sorts of automations you can do to make sure that operators are spending less time doing what they have, and you get really good records. But operations, because commercial real estate is so competitive, that might not be enough. And if you're on the bigger deals, then you're going to outsource it to a third party anyway. But the next place the repositioner is going to look to find that upside is going to be getting a contractor team in there to do a value add. In other words, renovations. So they fix the units up so that the next tenants will be happy to pay more than the previous ones. But of course, you can spend way too much money on these contractors, So one thing that the repositioner might really, really need, especially if they're like me, and I don't know if you know this about me, but I'm from the internet, so I need a local. I need somebody who lives nearby who can be there in an hour or two, because that's not going to be me. I'd still be at the airport in an hour or two if I had to help out. So when the repositioner has this whole team together and they turn around to the financier and they say, hey, I want to pick up this property. It's worth tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend me, do you? Well, the financier is going to have one more question in their mind, which is, who's your sponsor KP? And some coaching programs kind of gloss over this part, but if you want to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. So even if you're Jeff Bezos or something, if you want to buy a 350 unit apartment complex, somebody in the fold is going to have to already own a 350 unit apartment complex, or you're not going to be approved for the loan. On top of that, you need a certain amount of liquidity. And then among this ownership team, you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you've got yourself a commercial deal. So Gina, as far as your core competencies go, where do you see your main strengths that you'd be contributing on the die?
Yeah, so I am a super curious person, super analytical. I love numbers. And so I do love to reposition assets. I think it's a ton of fun trying to figure out where is the difference in the spread between what the seller wants to get and what I want to offer.
Mm-hmm.
A lot of fun trying to dig into that and seeing, what are the comps that they're using? Is it really applicable? And so on and so forth, trying to figure out, is there something that deviates from the norm, even in terms of, maybe the utilities or something, right? Maybe there's like a break in the water pipe somewhere, and that's causing a leak, and that's why it's causing the bills to go up. Like what can we dig into that's going to really cause us to be able to optimize the operations or this property, right? What can we do to increase the rents, but also in a way that's going to improve the quality of life for the residents that live there. So, ideally would love to try to find a solution that can be a win-win-win solution for everyone involved. So those are things that I really like to try to narrow in on and try to figure out, what can we do to make everyone happy.
Mm-hmm, mm-hmm.
The other thing is, definitely involved in investor relations. Everyone has people that they work with, and then, trying to make sure that we communicate with those people, keep them happy, making sure that they are kept in the loop. It's commercial real estate, right? As we have touched upon before, things happen, right? It's not the easiest thing. There's a lot of issues that happen behind closed doors. It's very complicated, especially if you have, moving market conditions like we are in right now. So those are things that are very important just to kind of maintain, and also asset management as well, right? Like there's no way that I could possibly communicate with people what's going on if I have no idea what's happening with the asset itself. So sitting on those calls, strategizing of, are we going to go with, option A or option B? What's the better cost savings? What's going to give us the better, traction, things like that. Those are all kinds of things, different areas that I'm involved in.
Excellent, excellent. So the next question then has to do with your ideal property or buy box. And when syndicators, investors are saying, hey, what you looking for? What's your ideal property? They're really talking about three things. First one's geography. So which states, which counties, even which neighborhoods, it could totally matter. Okay, so geography is the first one. Second one is the size of the deal. We're talking about multifamily here, and the way that they gauge that is by unit count. And the reason why that's so important is because you're going to have a different type of group of people who are going to go after a 15 unit deal compared to the ones who are going for 500 unit deals. Okay, so the size absolutely matters. And in commercial, there are other kinds of commercial like industrial or warehousing where it goes off of square footage, but we're generally looking for the unit count here. The third thing though, one word has two different meanings. It's class. And the first definition of the word class, it has to do with the condition of the building. So is it a really old building, or is it a new build? Is it really bare bones and, has no real amenities or anything like that? Or is it super fancy? Okay, that's one version of class. The other version of class has to do with the neighborhood where the property is located. So that can be like, what are the school districts like? It can be what's the crime rate like? Okay, those are the two different meanings of class, and both of them are rated the same way as in grade school with like A plus, A minus, B plus, and so on. So Gina, as far as you and your crew goes, what's easier to say yes to, more difficult to say no to?
Yeah, so in the past, most of our properties have been Class C properties, but as of right now, there is a little bit of an affordability issue happening within those properties.
Mhm.
And also, I've talked to a couple of different property managers and asset managers, and they kind of the consensus that I'm hearing is there's also a flight to quality. People are, if they're going to be paying X amount of dollars, they'd rather have a better type of property, maybe something that's newer or can offer more smart amenities, things like that. And so these days I have been focusing a little bit more on the Class B type of properties, especially as we're kind of going into this, recessionary period. It's something that I'm trying to target a little bit more of these days. As far as size or area, right now I'm focused on Phoenix and Texas. I guess not just Phoenix, Tucson as well. So Arizona and Texas. And in terms of size, generally 100 plus in the Texas area, and in Arizona, it would be good if we could be around there as well. But in Phoenix, pricing is a little bit higher, so would be open to slightly smaller units as well over there. Ultimately, it kind of depends on what pencils out, really, and also the leverage, right? If we're getting very low leverage, could be a little bit harder to close. And being in the time that we want to be in, I would rather work with properties that may be smaller but give us a higher probability of closing, because that reputation is paramount in this
Mhm.
industry.
Beautiful, beautiful. And my next question has to do with who you can disproportionately help. See, everybody in commercial real estate, they had, even though we're always eager to give referrals, references, and build new teams, at the same time, we're better suited to help some more than others. Me personally, it's always the sponsor KPs, and that's because of my marketing and CRM background. So they'll actually have the foundation where I really can make an enormous difference. Whereas normally, like most people consider themselves to be more of a repositioner, and those guys, they need grunts. Somebody will put in the 80 hours, the 120 hours or something like that, and that's not really the best position for me right now. So Gina, how about you though? Oh, if you have any 506B raises going on, don't entice investors. So if you have like a donut or like a candy cane or something, don't wave it in front of the camera because that's very enticing, I guess. But oh yeah, yeah, coffee, tea. No, yeah, right. But so as far as the different people, the different roles in commercial real estate, who are you disproportionately well suited to help? I know you can also say beginners who want to learn, if you want to say that.
Yeah, so yes, I do enjoy helping beginners, people, because this is an industry where relationships are so crucial. And it is a industry where going into it, it seems like almost an impossible task to be able to transition from, especially if you don't come from a background where this is normal for you. But more so, but in addition to that, I actually like to work with repositioners. I know that I like to underwrite as well, but what I've also found is, I'm in Southern California. Phoenix isn't too far away from me, but Texas is a little bit farther. It's not, I don't live in that backyard, as you mentioned, right? I can't drive 1 or 2 hours to where I need to go. And so I can't always be there. And so some of the people that I work with, they are much closer, they have better access to it. And sometimes they just might not have enough time, right? They're like, well, I'm doing this and this and this and this, but I just need a little bit more of a fine tooth comb to go through some of these things. And so I do work with other people who are underwriters, and we will work together, right? And I will kind of dig through certain things. There's, being that I am from the mortgage industry, there's certain like tools and certain accesses that I have that I find make it a little bit easier for me to kind of comb through some of this data. And so kind of depending on what's going on there, I found that those relationships have also been very successful as well.
Beautiful, beautiful. And then you and I ended up meeting through Yona Weiss's LinkedIn challenge, and I'm always on LinkedIn, and I got a distinct last name, so it makes me really easy to find. This QR code here, that's for the FAQs page of 506BME, where it talks about how I can be your chief compliance officer for as low as $497 a year. But Gina, if people want to reach out to you, is LinkedIn best, or is there a website or phone or email, or like what's the best way to reach you?
Yeah, so these days I've been much more active on LinkedIn thanks to Yona. So you can find me on LinkedIn. My name that you want to search by is Gina Linette Shin, my full name, just because Asian people all have the same names. So Gina Linette Shin. There should only be one of those around. In a similar, I have been a little bit active on Instagram. I just created another page just for the real estate stuff. And that one is going to be Invest with Gina. Also, my website is also a great place to reach me at. You can go to shinequitypartners.com. So you can reach me out on all three different mediums. Really happy to connect with anyone.
All right, beautiful. And then the last thing, it's not for you, it's actually for you in the audience, which is, once again, if you've been noticing searing pains in your eyeballs, maybe migraine-like symptoms, is probably because of the big, horrible, ugly red button under there that says subscribe on it. You really should get rid of it. It's totally free to get rid of it, and it gives you the gray button, which that it does not hurt eyeballs. It's much better, and it means that YouTube will pay for these videos instead of me, that's what I get out of it. But I should tell you, all it really does is it means that my videos might show up on your list of suggestions, but you can go ahead and ignore those. That's perfectly fine. I just appreciate the fact that you spent this time with me. Just like Gina, I appreciate the fact that you spent this time with me. This has been really great getting to know you a bit better.
Yeah, thanks for having me. It's been awesome.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.